Most people think crypto trading happens on exchanges. You open an app, see the chart, place an order, simple. But behind the scenes, a huge portion of crypto is traded somewhere else entirely. It's called OTC trading, over the counter, and it's where the biggest players operate. OTC trading is used for large deals. We're talking millions, sometimes billions of dollars. At that size, using a normal exchange becomes inefficient and expensive. So instead of placing orders publicly, buyers and sellers go through an intermediary called an OTC desk. Here's how it works. Let's say someone wants to buy 500 Bitcoin. If they try to do that on an exchange, their order gets filled in pieces. First at one price, then higher again. This is called slippage, and it can significantly increase the total cost. On top of that, other traders can see large orders forming. They react. Prices move before the buyer even finishes. So instead, the buyer goes to an OTC desk. The desk finds sellers who already hold large amounts of Bitcoin, maybe institutions, funds, or even its own inventory. Then it offers a single price for the entire trade. One deal, one price, no market impact during execution. Once both sides agree, the transaction is settled directly. This is why OTC exists, to move large amounts without disturbing the market. And it's not small. Some estimates suggest OTC volume can rival, or even exceed, public exchange volume during certain periods, which leads to an important point. The price you see on charts doesn't reflect everything. OTC trades happen privately, so they don't immediately move the market, even if massive amounts of crypto change hands. But eventually, that liquidity has to rebalance. OTC desks often hedge or adjust positions on public exchanges afterward. And that's one reason why the market can feel quiet, then suddenly move fast. The real activity might have already happened. You're just seeing the delayed reaction. There's another effect too. When large players trade off exchange, there's less liquidity sitting on public order books. That means smaller trades can move the price more than expected, so volatility increases. In simple terms, exchanges show you the surface. OTC is where the deeper currents move. And if you want to understand how big money flows in crypto, you can't ignore what's happening behind the scenes. Thanks for watching. If you've got questions or thoughts, drop them in the comments. We're happy to reply. At Mudley Group, we're building a space where anyone can learn trading, improve together, and feel supported, whether you're brand new or already trading. Follow the channel, like the video, and check the description for useful links. See you in the next one.